Welcome to FTAs Now CEOs Roundtable. FICCI is celebrating 100 years, and we have the entire FICCI top leadership here for this roundtable here. So starting off with Anand, we just completed the first quarter earnings, and we began that with an assumption that there would be some kind of hit because of the West Asia crisis. But I think the markets are happy that there's not much of an impact. What is your initial assessment?
I think there was a big transition point October last year when GST 2.0 came in. And since then, we've seen fairly strong demand, particularly in some sectors such as automotive. Infrastructure itself has been a high area of investment by the government. So the entire value chain of infrastructure has seen good growth. So to that extent, we're seeing demand continuing to sustain despite the West Asia crisis. And that, I would say, is a positive surprise. The challenge, to a certain extent, is on the margin side. While in quarter one, there's been maybe still some positive surprise there, but I still think that all the commodity price increases still have to get passed on. And for some time, maybe another quarter, we can see some stress. But those risks are also waning away as commodities, crude has come down to about $80 today. So I still think that domestically we are fairly strong. There are the external risk factors still do prevail.
Vijay, you're linked to the crude market. How are you coping up with the kind of volatility which is coming in with respect to crude and crude derivatives and chemicals?
So the chemical sector has faced the brunt of the West Asia crisis in many ways, along with the fertilizer sector. There has been a very significant impact due to ships not being able to sail the Strait of Hormuz. Now we also have the Red Sea crisis looming. So in both cases, there has been a substantial impact. I would say the government and the RBI must be complimented for shielding much of Indian industry, the small-scale industry, medium, as also the consumers from the impact. But I would echo what Anand said, that the first quarter maybe there has been not as much of an impact. But I would certainly be a little bit more cautious in the second and third quarters. There could be some impact because the crisis has not blown over. There is definitely going to be an impact on higher pricing down the chain, and maybe potential second-order impacts on demand as well.
Mr. Panda, the metal sector, how is that coping up? If you look at some of the earnings which have come in, it looks like they've been holding off and good realizations have come in. At least the commodity cycle is helping you guys.
Yes, absolutely, Sajit. The metals sector in general has been doing well. And the reason for it also has been while demand has been okay. I mean, I wouldn't say demand has been fantastic given all the uncertainty and everything else which is going on around the world. But this is a sector which has also seen a lot of underinvestment, over the last 7 or 8 years, starting with COVID. And keep in mind that, investments in this sector, even when the tap is turned on, which I believe it has, companies like us are investing significantly in increasing capacity. But it's easier said than done to bring new capacity online. But having said that, I think going ahead, I do echo what Anant mentioned, that while there will always be some sectors which are leaders and some sectors which are laggards, and I'm talking in terms of performance, but over a period of time, it tends to sort of, balance out. And I think going ahead with, hopefully some of the geopolitical uncertainty coming to a little bit of a resolution point, we will see more conviction in, in a sort of a more secular manner across various sectors of the economy.
Ms. Kidwai, we've seen good credit growth happening, 18% credit growth coming in. Do you see there's enough resilience in the economy with respect to absorbing the inflation impact? Ma'am, the mic.
I do believe what you're hearing here is that resilience is showing through in terms of sectors that are coming through. In the near term, I worry a little bit because at least some of the companies that I'm associated with, wearing my private equity hat, there are companies that are selling off inventories where the price points are still contained. And as they rebuild up inventories, and everyone was just hoping that the issues with crude and the Straits of Hormuz would sort out, we may begin to see that inflationary impact because new product is going to be priced more expensive than old product which sat in inventory. So if this price of crude can stay suppressed as it's sort of bouncing up and down, maybe we don't see that. So yes, inflation, I think, is a worry. And I do believe it's being closely watched by RBI, by government. And the shielding that has happened by government in terms of price of oil has also been very important, because at the individual retail level, we have not seen that impact. But so near-term issues. Longer term, there's been an opportunity, because the price of fossil fuel pushed everyone into looking at EVs. So you see the jump in EVs, the big push now into biofuels. So there are whole different industries. I mean, even the push in ethanol, as that debate continues. All of this is actually terrific for India in the long run. And the fear and our own vulnerabilities to fossil fuel are creating new business opportunities as well.
Mrs. Somani, your sector has been the worst hit, initially at least, and now it's getting back to normal as far as operations is concerned. If you remove Morbi, which is still 15% of that units are still shut, how is the sector coping up with the kind of energy crisis which is there?
So as you know, the ceramic sector is heavily dependent on gas, and that supplies were disrupted because of the war. They have subsequently now significantly improved. Morbi was particularly disrupted because they were particularly affected because they had switched to propane being cheaper, and they had disconnected supplies from the gas lines. The organized sector, the larger players were not affected because we were buying gas as usual from the sources like GAIL. So I think there was disruption, no doubt, but it's come back now. I think 75% of Morbi has started again. The larger players were in any case never disrupted. The demand has been good, and cost inflation has been there, but I think we have to live with that. As I understand, in spite of the war, let me say normalizing, the prices of gas are still about 25 to 30% higher than before the war started. There is a cost input on gas as well as some other materials, chemical additives, etc. They've all increased significantly in price. But depending on the strength of your brand, these are typically priced out, and frankly, the consumer pays for them over a period of time.
Mr. Kurakiwala, 2025 we had tariff issues coming in, then Section 301 investigation which was coming in for the pharma sector. How do you assess the future for pharma, especially with respect to export-oriented companies?
See, pharma, if you look at it across, is a very large export-oriented activity, especially in the United States and other parts of the world. And one doesn't see any challenge in the traditional generic pharma export taking place. However, the US generic market is going through a little bit of enormous price pressure because of Indian companies only being there. And literally everybody is there. It is we dominate that market. So there is going to be a price pressure there. The opportunities area would be more biological. And Indian companies are trying to go into biologicals. But I think in this case, the China would be a challenge. In pharmaceutical, chemical pharmaceutical, so far it was not there. We had in a leadership position. But biological, China is today nearly at par with the US in terms of technology and innovation, both.
Mr. Gandhi, do you see that's a challenge for the industry, getting into the biologicals or the biosimilars market, which is more lucrative going forward?
Looking into the biologicals market, as far as India is concerned, it is headed towards becoming the hub of biologicals. I think whether you take veterinary biologicals, we manufacture veterinary vaccines. It's become a hub. There is a lot of talent over here which is available in India. And I think overall, India is well positioned to become the supplier of biologicals all across the world. There are a few challenges in towards manufacturing biologicals because certain raw materials, India is still dependent on the West to procure them. They may be very low in quantity that are required, but in biologicals, everything is extremely critical. So that's where currently the challenge is. Even during COVID time, 1 or 2 raw materials delayed the manufacture of the COVID vaccine. We had the technology, we had everything in India. But having said that, there is a lot of indigenization that is happening, and we are headed towards becoming reasonably self-sufficient as far as biologicals is concerned and be a good global supplier.
एक पीढ़ी की विरासत, दूसरी पीढ़ी का संकल्प, स्वतंत्र भारत से विकसित भारत की ओर। आजादी के इस महापर्व पर हर भारतीय को सादर अभिनंदन।
Move. The possibilities are endless. The future is bright. Move that mountain. Chase that dream. Future engineers, lawyers, scientists, journalists, and more.
This Independence Day, let us celebrate the spirit that keeps India moving forward with courage in our hearts and hope for tomorrow. New India Assurance, protecting every journey, every tomorrow. Wishing you all a proud and joyful Independence Day.
Mr. Agarwal, if you were 25 years old and starting from scratch in India today, where would you build your next business?
At that time, I always thought I will sing a song, I will make a movie, but I have not changed my business last 40 years. I have no godfather. Today, if I start anything, I will have a blend, but India and international.
As India becomes one of the world's youngest economies, what advice would you give young entrepreneurs building businesses today?
Any country, they need people. Our youngster, very smart. The world is in their hand. Everything is there.
Sure.
Look at what skill they have. Natural skill. And they work on it. There is no question that they will not find a success. This will take our country at very different level.
Presented by IDFC First Bank, always you first. Co-powered by Star Health Insurance. Business travel partner AIBiz, Air India's business travel platform for corporates and enterprises, making business travel smarter.
What happens when the game changes? You keep moving. You keep slaying. Keep celebrating. And if they keep talking, keep them talking. Because no matter how far you've come, you keep walking.
Anand, let's look at what's in store for the next 3 or 4 quarters. We started off this war saying that, it will get over in a month's time and it's going to be a little impact. But external headwinds continue to be there. While, first quarter numbers could be, something to cheer about. Do you think that that can be sustained if this West Asia crisis continues?
I think we'll have to be living with the uncertainty because we were hoping that things will get better soon. But certainly, I'd say the positive is we didn't expect crude to come down to $70 when there was positive news either. So to that extent, even if crude stabilizes at 80, 85, price passing on is happening to a certain extent. So I think after Q3, margins will stabilize. Will there be uncertainty? I think there's enough external factors, whether it is uncertainty of rainfall and El Nino impact and other things. Currently, the most recent uncertainty that we are experiencing is that of container availability for exports. We are finding that exports, while demand is resilient, we are finding that we're just not able to export because a lot of the containers have gone from China to the US because of changes in duties that were going to happen between the two countries. And now the reverse containers are just not coming back. So I think we just have to be agile. I'd say internally, say in our company, we've created a concept of war rooms where you have a small team of 3 or 4 empowered CFO, CHRO, and COO kind of getting together and taking very quick decisions on procurement, on logistics, supply chain management, Forex, and all of that as well. So this is something which I'd say is part of life.
Ms. Kedwai, foreign flows, you look at that very closely from a private equity and from a foreign portfolio investor's point of view. Whole of last year, we've seen a lot of outflows coming in. Now it seems the selling is, stabilized a bit. But do you think the growth is good enough for foreign flows to come back?
So I was just looking at these numbers, and if I have this right, only 20% of our foreign flows are actually FDI. The rest is private equity. And private equity, much as I love it and work in it, is shorter term. By nature, 5 to 7 years, if you're lucky, and it's from the sovereign wealth funds, maybe 10 years. FDI is really what the country is seeking. And I think it is the space which we absolutely have to focus on. I see reasonable success in electronics. So clearly what that agenda government had, and if we can replicate the Suzuki model, where Maruti, when it got set up, had this huge bunch of auto ancillaries it encouraged. Can we pick industries in the same way and force the supply chain to Indianize over time so that we create that whole bank of what we get now, the auto ancillary sector, and what we are aiming to do in the electronic sector. So the FDI policy, I think, is also pragmatic now vis-a-vis China and FDI in that to enable Chinese companies to set up here in a form that is attractive to them, so whether 49% ownership works or not remains to be seen. And I say this because our dependencies are huge on China. We can't wish it away. So can we make them part of our own growth and expansion as against being the ones that come in with the cheaper equipment in particular? I think the whole area of capital equipment and import will remain an issue as long as we see China as a competitor and get reliant too much on a Western world, which is overpriced, and do not develop our own solutions therein.
So co-production in India, but I think Vijay will have an issue with the kind of dumping which is coming from China, right, for your industry?
Yeah, unfortunately, what we've seen in the last few years in many sectors is actually other countries making for India rather than we making in India. So what we strongly advocate in FICCI is making in India. Our 4 priority sectors, which Anant has championed, which is R&D, the supply chain resilience, technology and manufacturing and innovation is something built around Viksit Bharat, which needs make in India. Unfortunately, we are not seeing enough FDI, enough money coming in and investing on the ground. In fact, we have a different situation now, Sajid, where people actually, FDI that has come in, invested in assets on the ground, brands on the ground, have actually taken advantage of the very buoyant stock market and listed their subsidiaries and taken capital out, which is quite a strange situation. It doesn't happen in most other other parts of the world where people list their subsidiaries. So we're seeing a situation where the buoyant stock market has actually led to a challenge for India. So we need, I guess, it needs some cost correction and thinking by the government. How do we get more investment on the ground? The one thing we have going for us is our long-term potential is amazing. No other country has this level of population and growth forecast for the next 100 years. How do we take advantage of that and make in India?
And Mr. Panda, I mean, are you also facing that challenge with respect to the kind of dumping coming from for the metals sector there?
In my particular sector, which is ferroalloys, no, we don't face that challenge. Fortunately, in fact, we are, it's a large foreign exchange earner. But I have a very, a very strong view on dumping and where do you find that balance? Because life is all about finding balance, if you ask me. Because I mean, of course, there is, you have to balance the end consumer's requirements versus that of the producing entity. And swaying in any direction too much is from a policymaker's perspective is not correct. So where is that defining? Where is that sort of a fulcrum on which I think one should balance it? I think it's plain and simple based on fair competition, because I completely sympathize with what Vijay made a point, which is that, Indian industry today is confident, it's capable, it's world class. What you can't take on is unfair competition. So, I mean, as long as there is a level playing field, I think Indian industry, and FICCI has been advocating this for a long time, is ready to play on the front foot and face competitive challenges, but provided it's a level playing field and not unfair subsidies or things of that sort. But having said that, as I said, one has to find that, from a policymaker's perspective, to balance that between saying that, I mean, if there is a competitive edge that downstream industries can get, in a manner which is legitimate and not due to unfair subsidies, then don't take that away. But be careful about, not, policies which result in core industries facing unfair challenges and struggling to keep up or struggling to invest, which will then come to bite you sooner rather than later.
Mr. Sobhani, one of the key challenges for your sector was the supply chain, especially gas coming in. Do you think the industry has now learned a lesson of how to ensure that you have an alternate supply chain of gas and others coming in?
Actually, unfortunately, in this industry, there's no substitute for gas. The kilns, the furnaces that heat these products and bake them, can only work on gaseous fuels. So you have LPG and you have gas in whatever form. Rightly, the government of India cut off the supply of LPG and prioritized domestic consumers. And that's absolutely correct, because otherwise kitchens would not run. So we were left only with the supply of gas. And gas was disrupted to reasons beyond the control of our country and its government. So frankly, I think they managed it well. And now I think more supply chain has developed. There's a lot more gas coming from the US to offset the lack of gas coming in from LNG coming in from Qatar. I think it's, we have discovered another source of gas, and India has signed many contracts for significantly raising the supply of gas from the US. It costs a little bit more because of the extra freight, but I think it's worth the risk, and industry definitely has no problem paying for the extra cost, because it prevents disruption to the industry. So we are go, no go. We either run or we don't run. In that case, cost is immaterial, frankly.
Mr. Gorakiwala, supply chain is something which Pharma has, has done well with. Actually, after the COVID thing, you've been able to. Many of the companies, including yours, have been able to do a good supply chain management. What is the lesson that you have learned from there, and how has that come to help you in this crisis?
See, for pharma industry, there is a good industry in India of making bulk drugs, and also we import intermediate of bulk drugs mostly from China.
True.
And from that context, I think it has been reasonably stable situation. And that is sometimes government feels for strategic reason you should make some of those important bulk drugs in India. But I think what we are doing is we are barking the wrong tree. because what we are doing really is creating considerable value-added product. You make the final product, you send the formulation, the value creation chain, it is very significant. So to invest in yesterday's technology or yesterday's idea is no good. So I think one should encourage more on the area of innovation and research. And I think our industry's differential would be research. Because we succeeded in technology part of it. It's not pure generic, because there is a lot of technology, there is a lot of work done. Now I think we should move up the chain as an industry in terms of research in the higher end of technology, maybe new drugs like we have been doing and spent so much money. And I can tell you in our areas of research, antibiotics where we are there, the big pharma had given up research when 2-3 decades earlier. That's why we entered. Today they are getting out of the business because it's not as big ticket item, as remunerative as it is. For us, it is very good. And therefore, one can build in these new areas. We have to find a niche in our industry. It's an industry with so many things you can do. And there are always vacant spots available. And that is where one has to creatively find niche, and we can become a very important players in times to come.
Mr. Gandhi, you're in a industry which is emerging and where a lot of investments is now going animal health care. And even some of the FMCG companies are getting into some of that segment. How do you look at what Mr. Korakula said, that there is need to be an R&D of emphasis which has to be there on value-added creation for the industry?
R&D is a very important factor in biotechnology, in vaccines. What has happened is that now companies are investing in India, but over the last so many years, companies in Europe, in the Western world, thinking, with their good balance sheets because of the hefty margins, etc., they have always been reluctant in transferring technology to India. In biologicals. But slowly India is now developing its own. We have the research institutes, the government research institutes, few private research institutes, so which is now taking the development work ahead. And yes, it is going a little slow, I must say, because the technology transfer from these institutes, it's not as seamless as what one would get it from a Western country. But then, of course, that is if you get the technology. So having said that, I think India is progressing reasonably well towards building up its own technology. There are many scientists who are now individually, see the world, even in the Western world, there has been a lot of recession, etc. So there are many independent entities, individuals, companies who are now willing to give technology, willing to give seed viruses, and those deals are much more cheaper and much more accurate, because then you are dealing with a few individuals and you are getting the technology. So it's headed towards India getting technology, building technology, and becoming more stronger in biologicals.
Human AI Literacy Mission, a groundbreaking national initiative to bring responsible, values-driven AI education to schools across India. Uniting education leaders, policymakers, and technology experts to prepare the next generation for an AI-powered world. Watch Human AI Literacy Mission this weekend at these times on ET Now and ET Now Swadesh.
What happens when the game changes? You keep moving. You keep slaying. Keep celebrating. And if they keep talking, keep them talking. Because no matter how far you've come, you keep walking.
देश का दिल मध्य प्रदेश बनने जा रहा है समान अधिकार और न्याय के एक नए युग का साक्षी। प्रधानमंत्री श्री नरेंद्र मोदी से प्रेरित मुख्यमंत्री डॉक्टर मोहन यादव ने राज्य की विधानसभा से समान नागरिक संहिता विधेयक 2026 पारित कर प्रदेश के इतिहास में जोड़ा है एक महत्वपूर्ण अध्याय।
समान नागरिक संहिता में युगांतकारी प्रभाव, खास करके धार्मिक स्वतंत्रता, ये सभी धर्मों का सम्मान करने वाला कानून है। इसमें किसी धर्म को नीचा नहीं दिखा रहा है। क्या हिंदू, क्या मुसलमान, क्या ईसाई, क्या पारसी, सभी धर्मों का समान सम्मान करने के लिए कानून को लगाया गया है।
समान नागरिक संहिता विधेयक 2026 लागू होने के साथ प्रदेश में सभी नागरिकों के लिए एक समान कानूनी व्यवस्था सुनिश्चित होगी। विवाह, उत्तराधिकार, दत्तक ग्रहण और पारिवारिक अधिकारों से जुड़े मामलों में समान नियम लागू किए जाएंगे।
बच्चों का समान अधिकार होगा। अभी लड़के लड़कियों का अलग अलग है नहीं, सबके बराबर के अधिकार होंगे।
ये व्यवस्था सुशासन, सामाजिक न्याय और संवैधानिक मूल्यों को नई मजबूती प्रदान करेगी। साथ ही ये कानून नारी सशक्तिकरण की दिशा में एक महत्वपूर्ण कदम साबित होगा, जिसके तहत महिलाओं को संपत्ति सहित विभिन्न कानूनी अधिकारों में समान संरक्षण और अधिकार मिलेगा। मोहन यादव सरकार राज्य में विकास और सुशासन के नए आयाम कर रही है स्थापित।
Mr. Agarwal, if you were 25 years old and starting from scratch in India today, where would you build your next business?
At that time, I always thought I will sing a song, I will make a movie, but I have not changed my business last 40 years. I have no godfather. Today, if I start anything, I will have a blend, but India and international.
As India becomes one of the world's youngest economies, what advice would you give young entrepreneurs building businesses today?
Any country, they need people. Our youngster, very smart. The world is in their hand. Everything is there.
Sure.
Look at what skill they have. Natural skill. And they work on it. There is no question that they will not find a success. This will take our country at very different level.
Presented by IDFC First Bank, always you first. Co-powered by Star Health Insurance. Business travel partner AI Biz, Air India's business travel platform for corporates and enterprises, making business travel smarter.
Anand, Mr. Korakiwala and Mr. Gandhi spoke about technology, but one technology which is disrupting is artificial intelligence. We had the governor now talking about either you shape artificial intelligence or the artificial intelligence will shape you. How do you think India Inc. is prepared to manage that kind of transition?
I think India Inc. is absolutely clear that AI is there to stay. It will be tremendously disruptive. We are seeing it particularly on the IT services side, where we've seen correction in terms of valuations. And I think in that space, there will be dramatic change. There will be winners and losers, and those who adapt faster are going to win. The manufacturing space is relatively lesser impacted, but there too, there will be a substantial change with Industry 4.0, AI, etc. coming in. So I think it's a matter of reskilling ourselves, making sure there's adoption of AI in everything that we do. And in an environment where we've all come from non-AI backgrounds, we are all, whether CAs, MBAs, financial, or engineers and so on. So how do we reskill ourselves as leaders, as well as spread that message all the way down to the people on the shop floor? I think is going to make or break our future as industry.
Vijay, how do you look at AI in manufacturing, especially with respect to how it's going to reshape the processes there?
As Anand said, I think it's still very early days in manufacturing. We're still not seeing the full impact of AI in many parts of our industry, industrial process, manufacturing processes. It is coming in a few areas, how to improve process efficiency, IoT is coming in, which is coming in various shapes earlier. Now there's means to try and see if there are ways to accelerate that process of digitalization and I guess less human interface that was there. But the impact is still not as much as it is in some other aspects like software or HR processes or accounting processes. I still think it's early days, but Indian industry is certainly trying to adapt to AI coming in manufacturing processes.
Yes, Ms. Good way.
I think the opportunity in manufacturing is huge, exactly as Anant and Vijay are laying out. I sit on the board of a Swiss company which has used AI for manufacturing process in terms of prediction. So what has happened is where a furnace shows is going to heat up in 3 weeks, which was their traditional norm. So you knew you had to shut it down for maintenance work. Through predictive AI support, they've now shown that in 6 months they can predict that same problem. So imagine what that means in terms of the ability to shut down the line well in advance, do maintenance work well in advance. It's not a fire at the last minute. So the ability to, and the data was always there, right? It's using the same sensors, the same data, which was in the first instance being done by human brains to reanalyze. Here, it's being done for you with the same data through AI. So I think these are the opportunities for us that could well improve our operating efficiencies. And I'd rather favor the Chinese model in AI in that sense, unlike the US, which is much more sort of out there looking at the next innovation, which is how can you apply AI industry by industry to improve every aspect of industry. And maybe that is the model for us as we look at improving productivity and going forward with that.
Mr. Korakiwala, molecular research, a lot of AI being used there for molecular research and R&D. Are you able to bring down the cost of that research through AI?
We are examining that as a model, but obviously any research program has massive data, unbelievable data. So obviously AI will help us in speeding up understanding of the outcome of the data. It's tremendously, and what greater gain we see is the time reduction of data. If you save 1 year or 2 years of time on development of a new drug, that is a lot of value because your patent life is limited. So that is a very big advantage one sees. Our scientists are a little skeptical. Can they innovate? AI can innovate a new drug. And they somehow feel that AI is not yet ready. Because, look at that example of chess. AI is not able to beat some of the grandmasters in chess. So human mind, ingenuity and ability to connect unconnected is very high. But I must tell you another thing, what we are looking as an organization, where in all areas of organization, you have to be competitive within and globally. And there are a lot of low-hanging fruits in AI one can adopt in various parts of the organization. And that would bring, according to us, about 2/3 of improvement in productivity and savings. And it will cost you a fraction today. And there are a lot of AI approach and available locally developed. The cost of doing it is a fraction what you do in the West. So if we combine all these elements, I think that is the beginning one can make and get substantial advantage of AI across the organization in all functions at a relatively very modest cost.
Rajiv, what about the clinical trials? Does it help in clinical trials and better, faster drug to the market in that sense?
In a way, it definitely helps because the forecasting, predictability, these aspects are now much more, because it's a summation of all past data which would have not been actually used to really get into knowing things. It is definitely helping to get the drug, into the market faster than what it would have been earlier. Though these are steps which are still happening. As Anand said, all companies are yet crawling in the area of artificial intelligence, and they are first using it on the marketing side, and then they are going backwards up to the manufacturing side. And talking about vaccines, we are dealing with organisms, virus, bacteria. So AI can help to a great extent, but at the end of the day, it's like the growth of that material in the media, etc., etc. So that artificial intelligence sometimes does fail in predicting it absolutely in that way, because then sometimes there is some element, some difference in the growth. So that is also a factor. But having said that, it definitely is taking things forward.
Mr. Somani, he spoke about marketing and distribution. Does it help you in having a better planning, better just-in-time and access to markets?
So in our ceramic business, we have some 25,000 SKUs. Something or the other is always falling short. So we are using AI very well now in a much more structured S&OP process. The earlier one used to work on past data. But consumers are changing, their profile is changing, their age is changing, their requirements changing. So the past data is not reflective of the future. The AI modeling is helping us improve our predictability to market. So it's helping us get our product to our distributors, to our dealers faster, quicker, on time, and what they need. We are also using AI in our glass manufacturing, where we're the largest in the country. The machines are now talking to each other. We had a lot of data, but frankly, nobody used to go into that data in the depth that was required. Now the modeling itself is telling us where the fault is, and it is much easier to address the fault. We are working now further, our engineers are working on making the data actually talk to the machine itself so that it self-corrects. There's no human intervention required. We're still, I think, a year away from actually trying that model out, but I think in a year's time, our guys will be able to make the model talk to the machine, and then there is no human intervention required. It'll self-correct itself. So,
Mr. Panda, how's your sector managing the AI?
So, to carry on with some of the examples which have been shared here, that look, first and foremost, I think AI is here to stay, as Anand very rightly put it. It's a question of which sectors are early adopters, which sectors benefit more, which sectors take a little bit time to catch up. But I think the potential is humongous when it comes to manufacturing, because I mean we have all predictive maintenance has been there for a long time, but looking at that data and trying to predict failure in a much more proactive manner rather than simply number of operations of a motor or something of that sort. So the AI gives you the ability to to analyze greater larger data, more number of parameters, etc. But in our case, one of the areas where we are working on, and I think we are making a good amount of progress, is looking at efficiency of operations. Because again, furnaces depend a lot upon the burden mix. First of all, it depends upon the quality of the operator of that particular shift. But this is all individualized knowledge. How do you, I mean, not operators are as capable. A human being, by definition, will be able to look at 4 or 5 parameters as best when we are calculating a burden. But dump all of that data into AI, and it's actually tailor-made for it to analyze not just 4 or 5 parameters, but a lot more number of parameters, and come up with the optimal burden mix, the golden mix as it is called, and look to replicate that time and time again. But the bigger impact for us is not just the efficiency that you're looking to get, but institutionalizing that knowledge. So you're not dependent upon one operator running a shift, or if he or she were to retire or move on, then you lose that knowledge. So I think there's a lot of potential in manufacturing in AI. We are scratching the surface at the moment, but that's something that I think all of us here, coming from different sectors, everybody recognizes it's here to stay, and you adapt or you perish.
Anand, the cost of AI. That's something which no one talks about. Token costs are very high. If you depend entirely on that, the kind of advantage or the cost advantage which was there, that goes away because of that high token cost. Do you see a hybrid model of human AI in place for this because of the kind of cost benefits that's going to come in?
I think especially if you look at sectors where the capital investment or the scale of the operations are very high, I think the positive impact of AI will far outpace the cost. Now, some of the examples that we saw today, if you're looking at new product development and it takes you 2 years, 3 years to develop a molecule, or in our case, it takes us 2 years to develop a new tire, if we bring that down to 3 months by use of more simulation and more data, that ROI is far higher than the use of tokens. Similarly, we have thousands of salespeople who are selling our products. Now, if you can enable them with, again, far more data and increase their productivity substantially, again, that return is high. Manufacturing, the cost of factories, 300, 500,000 crores or plus. Again, some small saving there in Capex, 10%, 15% itself will result in large savings. So I think the benefits in manufacturing can be far higher.
How do you look at private Capex? Because we have been talking about private Capex for a lot of time. But Capex is happening, but not in the traditional sectors. It's moved away from traditional to newer sectors and newer areas. How do you look at that now?
I believe, as I said, demand has picked up post GST 2.0. Utilization levels have increased. Maybe it was about 75, it's going up. And to that extent, as demand is picking up, we are seeing an increase in private Capex. It is happening in certain sectors and maybe not fully across the board. And of course, new generation sectors such as electronics, now space, defense, drones, precision engineering, data centers. We are seeing that kind of Capex absolutely happening. We have new FTAs that we are signing. Hopefully that will result in Indians looking more abroad as we look at building global brands. And I think these will lead to opportunities of further increasing Capex as we make in India for the world, beyond making in India for India.
Ms. Kedwai, you are on the board of various startups and you look from a private equity point of view. How do you look at private Capex? Is it moving to newer sectors and moving away from the traditional ones?
I think the traditional ones, it's all about, as Anand said, about capacity utilization. If it's sub 70%, why would you be investing in new equipment? So to a large extent, it is about demand. New sectors don't have that issue for obvious reasons. They're new. They have to set up a plant. And fortunately, we are seeing that across some of the engineering sectors. We're seeing it in auto. We're certainly seeing it in the startup sectors are largely tech-driven, tend to be quite asset-light. And maybe that's a cause for reflection for us, that our growth is coming more and more from asset-light industries. And maybe looking at private Capex is something that we don't have to worry too much about, simply because the model itself is changing, as in new industries are just different in the way they're set up. The electronic sector initially is all about assembly, requires lighter Capex. As it goes deeper into manufacture, which is our hope, expectation, push, we will begin to see that expenditure. But it is something which the government is clearly focused on. And I do hope that for old industry, we see that Capex investment cycle come back in. If you look at the industries India's strongest at, though, IT, pharma, I mean, there's been no slowdown therein. We will continue to be exporters to the world. Our strengths continue to remain there. If at all there's an issue, it is with what I will call the old industrial model. But even there, and I'm familiar with the cement sector, sector which is growing enormously in India, and it benefits from the whole real estate cycle input. And I've been to a plant, for example, in Greece, where 90% of the energy is waste for energy. It's sewage and plastic waste, landfill waste. Think of what we can be doing in our country if we can innovate without even having to innovate for ourselves, but just learn from what the rest of the world is doing. In terms of production of cement, costs would go down because we're using waste for energy instead of expensive fossil fuel. So there's huge room for improvement, and that will not require a new cement plant or a new furnace. So I think we have, maybe looking at Capex per se isn't the right thing. We have to look at how we can produce more cheaper.
Anand, one important issue which we haven't discussed is the India-US trade deal. Where are we on that, and what is the industry looking forward to from the government on that?
I think there's still lack of clarity on the US side. So I think there are Supreme Court decisions that are taken. Even if India and US were to agree on a trade deal at this point of time, will that tariff prevail or not is unclear. So to that extent, we are at a 10% tariff, which got revised sometime about 10 days ago or so. So so I think first, I think that has to be solved. And I think the other thing is, what I understand is that we have to be competitively better than...
It's a new narrative that we have started, right? So, saying that we need to be competitively better than our,
our neighbors, China, Asia, etc. So I think that part also is something which is unsettled. So I think once there's some more clarity that emerges, I think we can look forward to a trade deal. I think until then, maybe we will be where we are at this point.
Mr. Khorakiwala, competitively advantageous position is what India is seeking for this trade deal. What would be that for the pharma industry?
I believe from a pharma industry, because the level of our penetration for pharmaceutical products in USA is so high. In fact, 45% of prescription written in USA comes from products manufactured in India. So irrespective of tariff, the one thought I have is it's the American consumer is going to pay. Because to create similar facility in the US, it takes minimum 3 to 4 years.
By that time, we have a next president coming in.
And more importantly, cost of manufacturing would be 3 times. So it's a zero-sum game for the US to either get it manufactured there or put a higher tariff. It's only American consumers will pay.
Mr. Somani, from the FTAs point of view, we have signed a couple of FTAs. What is the kind of market opening that it gives to the Indian industry, especially your ceramics?
I think the FTAs that we have signed are quite significant, and there are some bigger ones even coming, like Europe. If you take our share in major industries, our export share of the global trade, in most industries are export-oriented, even things like textile, we are 2 to 4.5% of global trade. That's it. So we have a very small position. I think these FTAs will help Indian exporters lower their landed costs to their consumers and will open the doorways for them for a much more competitive positioning in their countries. I expect that these FTAs will add to Indian exports significantly, particularly in areas where we have strengths and where we have low-cost manufacturing. So it will definitely give fillip to our, for example, our footwear industry, our textile industry. I'm not even talking of pharma, because pharma is already a very successful industry. We have severe, large penetrations in many markets, as Mr. Khorakiwala was saying. But in industries where we are less penetrated, I think the FTAs will help significantly. And the type of FTAs, I think this time, is far better than the quality of our earlier FTAs signed many years ago. This has been done after discussion with industry. So a lot of the industry's inputs have been taken by the government and acted on. And I think it's now the government has done its part and implemented the FTAs one by one. I think it's for industry to take up the challenge and actually make sure that export share in those countries and economies go up.
Mr. Gandhi, is that a big opportunity for animal health care? Because while generics is doing a big thing, they're already out there. Animal healthcare can India be the maker of animal healthcare for the world?
India has a good prospect as far as health products and vaccines both are concerned, and I always get down onto the vaccines discussions more than the health products because that's what we are in. Yes, health products, we could have a little advantage, but these FTAs are not going to give us a leap of a jump or something of that. As far as vaccines are concerned, even the FTAs are not going to be so impactful because the non-tariff barriers on exporting or importing biologicals are much more higher than the tariffs because you have microorganisms which are not allowed in those countries. They don't have certain diseases or they have disease with another strain of the same virus or the bacteria. So per se, the FTA wherever, with whichever countries we do, it would not have a very great impact as far as biologicals is concerned.
It's a panda, but for you, ferro alloys, it could be a good opportunity?
So yes, it is, because see, I want to dwell on one other aspect of FTAs. As Sandeep mentioned, I think what FTA gives us is access to us, as in the country I'm talking about, gives us access to newer markets. It's about give and take. But I think the other element of FTAs which have been very well negotiated is that nowadays it's not just about market access. It's also about investment. It's about technology transfer. It's about it's about a full bouquet, if I can put it that way. So from that point of view, and there is certainly far more thoughtfulness going into FTAs. So it's not a question of just blindly signing an FTA, but making sure that Indian interests are protected. And of course, FTAs are always about give and take. So you'll have to figure that out as to how that can work. But the onus, as in fact even the Commerce and Industry Minister has said, the onus is now in industry to act upon it. The government has done what it could have done, which is to negotiate well thought through FTAs, which involve investment, which involve technology transfer, which involve market access. Now it's up to us to act upon it, and I believe in a large number of sectors we are, and a lot of these FTAs which have been given effect to, have review mechanisms which will, in due course, throw up the data to suggest that we have benefited from it. Unlike some of the FTAs in the past, which we found out to our regret 5 or 10 years later that it had not quite the effect that was intended. Specifically, as far as ferroalloys is concerned, yes, some of the the treaty with South Africa, South Korea, which has been in place for a while, is I believe currently been renegotiated and all of that. But that's where we are a large, we have a joint venture with POSCO, we have large exports to Korea, etc. But by and large, I think one needs to look at the industry-wide impact.
Final word, Anand. What is one concern or headwind that you will watch out for the industry?
I would say in the near term, El Nino, that's something where weather patterns can really affect whether it's demand, agri, that space, and it has a substantial impact on a large number of people. So that's next 2 months still has to play out, and we'll get to know then.
And medium term?
Medium term, I would say the logistics challenges and supply chain with respect to the uncertainty with respect to the war.
Okay, gentlemen and Ms. Kidwai, thank you very much for joining us on this CEOs Roundtable. Thank you.